In Minnesota, 85% of all mortgage loans taken out last year in 2006 were cash-out refinancings, where the borrower refinanced and in part took cash out of the mortgage, cash out to pay for things like credit card debt, health care debt, to buy new cars.
My father and mother bought their first home with a subprime loan, so it worked out just great. But subsequently, my father developed two problems. He developed diabetes, and then he had a beat-up old car. So when he refinanced, he bought a brand new car.
So that partly fueled the borrowing situation, and what fueled the mortgage crisis, I think, is you got to look at the outset, there's an on-level playing field. An on-level playing field between the borrower on the one hand and the mortgage broker on the other. Anybody who's attended a closing knows the blizzard of paperwork, all the forms put in front of you, the 30 documents in mice-type print, and it's very difficult for borrowers to understand that kind of legalese, and the on-level playing field has been one which unscrupulous brokers and lenders have used to their advantage.
These are unregulated mortgage brokers, often on their own. Unregulated mortgage lenders, not banks, because banks have some degree of regulation. And they created the trouble.
So in New York, we have over 300 mortgage banking entities. We have over 2,400 mortgage brokerage firms. Each of those entities combined have over 40,000 individuals who originate mortgages.
The lender is all for the broker making a lot of loans and really turning a blind eye to any abusive features of those loans, because the lender is going to make the money selling the loans off as a commodity. So it's as if, the interests of the borrower aren't really part of this frame at all.
The banks are keeping this thing alive. They are buying these loans and pumping money into this system, which is keeping this thing going. In fact, I would argue that they're more guilty than these folk who are on the ground running around trying to con people.
What the Minnesota legislation does is a couple of different things. Number one, it puts a duty of agency on the mortgage broker to not treat the sale of a mortgage like you would the sale of a used car, but to really look out for the borrower's best interest and make sure that the borrower is actually going to benefit from the type of loan that's being recommended. In addition, it bans these so-called stated income loans, which have been a big area for abuse, where the broker would make a loan not based on verifying evidence, but simply based on what the borrower states on the application to be their income and assets. And that's been a problem area for abuse because it allows brokers to make up income that people don't have.
I especially want to say thank you for banning stated income loans. I heard of a situation about a month ago where someone who works as a maid at a hotel in New York, her information was changed to she was a domestic engineer. And her stated income went from, I think she makes about $1,200 a month, to somewhere around $5,000. Somehow domestic got taken off and engineer stayed. And her mortgage, which started out at about $1,700, will reset next year. She'll be one of the 2 million people that have it reset. And it should be somewhere around $3,700, $3,800.
And then another third main point is on these teaser adjustable rate mortgages, the mortgages where people are lured in with a low initial rate only to have that reset 2 or 3 years down the road, that lenders have to make sure that you can qualify not just for the teaser rate, but also qualify for the higher rate when it goes up. I think in the past, opponents on the other side of the aisle had been able to kill the legislation by saying, oh, that's just an issue that affects our core cities. And so we really made a concentrated effort at the hearings to have suburban people with, $700,000 homes who were in foreclosure attend to say this is something that affects everybody. It's something who affects the constituents of both political parties, and you can't just isolate it by saying it's a inner city problem. Having real live people tell the story, I think, was also incredibly helpful. These issues can get kind of esoteric, but we made sure at every hearing we had the live witnesses who were really harmed And we made sure that the people that we had present were people, again, from all parts of Minnesota. The people on perhaps our side of the aisle or the consumer advocate side of the aisle tend to be fractured. They tend oftentimes not to have a uniting force. They tend to all be on the same page and all have the same beliefs, but not necessarily speaking with one voice through one bill. And here, I think one of the reasons we were successful is we really did have everybody who wanted to see this legislation get together, have a consensus.
The function of the Marketplace of Ideas series is not just to have a speech about the dangers of predatory lending or, the impending doom of the foreclosure crisis, but instead to search, as we did, for the models that can actually prevent predatory lending and prevent a foreclosure crisis.